Hello friends, in this video we are going to discuss how to use Alvew AI Algo chart. So we will see the user manual which is in PPT form. So in this video we will discuss one part of this which is the main chart. There are three components of this. We discuss in three videos so that the video is not so lengthy. So have a overlook. So in the overlook, we see that AI algo charts integrate multiple components to simplify market analysis, provides trader with actionable insights for dynamic market conditions. So color theme, which is used in our system. So there are three stages of bull and three stages of bearish. Stage one is a good, then we have the better phase and the best phase. Similarly for the bearish, good, better, best, and the color is the lime green and blue or dark green and then orange, red, purple or dark red. So if we see the opposite of like lime is have the opposite color, bearish color orange, green red, and then blue for purple. Dark green is sometime also seen instead of blue, so is the dark red. So these colors you should have in mind while looking into our indicators. Now coming to the system. So this is the setting where if have the choice to activate alerts only for the entry or only for the exit or for both. Then we have the option uh, then we have the option like what kind of traders you are. You just want always the conservative trade, not so aggressive, few trades, but it should be solid one. Then you should go for the super bull bear if you want aggressive momentum when there is a direction is a different thing. Trend line is not supporting that moment, but moment is aggressive. And you can look for that alerts, that kind of trade, and you select here, and when you will get the buy signal based on that, and also the alerts. So also we have the option that you can have the alerts on the crossing of midlines. So for the swing trade or for option selling, you can use this midline cross facility where the markets is generally around this, either it stay or it uh, go in opposite directions. So in both way, the with the time decay you can earn money. Now coming to, there are some other facility where you can activate such thing. So bar color and then show price, label and time alert and cloud. So we will have such activation. After activation, how the charts will look, we will see that. So there are two main components, main chart and oscillator, and in the oscillator there is a table. Oscillator and table we are going to discuss in next part, part 2 and part 3. Here we will discuss only the main chart. So the key component of main chart are price band lines. There are 15 lines, midline, 7 upper bands, 7 lower bands, 200 EMA, stop loss line, Alvew candle colors, which consist of volume based color and MACD colors. Systematic walk color fill, where we will see whether the market is in random walk or it is in the systematic walk. So looking into the chart uh, band filling, we can in one uh, view we can understand that where the market is, whether it is in random walk phase or systematic walk phase. Price level will when activated, it will show you the displays, close price, daily change and time, daily change of price from the previous day and the time. Sideways cloud indicates narrow price range where a kind of cloud will appear on the chart, and if the price is within this cloud, you just understand that the price is not going to move further until unless this cloud disappears. And then we will also see where the entry and exit alerts are there. So we will one by one look into all these things and also pictorial view of chart. And in the last, obviously, we will also see the real chart. Okay. So these are the components of oscillator which we will discuss in next video. So coming to the price line band, so we have the middle line and its color is written here. It is a black line with white dots. And if it starts going up, then we have first is the upper line, which is of lime color, then upper line 2, which is of again lime color. Upper line 3 is a black, and here you see that the breakout is from this line. Okay, then we have the upper line 4, which appears as support line, then price when cross above this. Similarly, line 5, which is blue, and it again appears as a support line when the price is above this, but this can also appear as a resistance. So after that, we have the line 6, where we see that the price has reached to its overbought position. And then seventh line where we can say that there is the extreme over bought and the price might fall from this line. So in the opposite of this is bearish lines. For lower line 1 is orange, lower line 2 is again orange, just opposite of what was for bull, lime and lime, then orange and orange. uh, and the good thing is, one thing that I missed to say, that this second line appears only when the price is below line 3. Similarly, price will appear only when the price is above line 3. So this upper line will appear. Otherwise, you will see not 7 but 6 lines only. That will be clear when we see this on the chart. Okay, so line 3 is again black and it is for the breakdown, and line 4, lower line 4, color red, resist resistance line for trailing profit, and then we see that there is a start of momentum. Here the again lines 5 minus line 5 for increase in momentum and so on, then oversold and the extreme oversold, just like for bullish. We talk about the lines and now we talk about the levels. Like above zero, we say that the level is level 1, upper level 1. When the price is above mid, when it is above line 1, we say that it is level 2, upper level 2. And if we see the price behavior for both upper level 1 and level 2, it is a sideways. Level 3 is sideways. Level 4 magic starts from here. We say that the price is at the breakout stage where we can enter into the trade safely. And then we have 5 where we enjoy the ride momentum. Again, level 6, enjoy the ride. Level 10, overbought level. And then overbought level 8 is overbought level. Okay. Then we come to just opposite of that. Below midline, there is level 1, 2, 3, 4, 5, 6, 7, and then we say sideways, sideways, breakdown, entry, momentum ride, and then 7 is oversold, and then level 8 is again oversold zone, extreme oversold zone. So whenever we talk in a scanner of the levels, we should have the reference from this slide that what I am talking. Okay. So these lines are appearing on the chart in such a way that there are 7 levels. You can have the clear cut indications. We have seen the colors and then we see where what line we are talking about. So for the bearish, again we see, and this is for bearish, this was for bullish. And then we have this 200 EMA, and then we have this stop loss line. Candle colors, there are 6 colors, 3 for bull and 3 for bear. So you can see that one is a simple green bull color, and then dark green volume color, and teal green is for MACD color. Again, opposite of this dark red volume candle and crimson red is MAC candle, and the red simple red is for bearish candle. So now we will see why these kind of three candles are. So first is stage one, where we see that okay, green color where simply open is greater than close, close is greater than open, and then stage two we see that close is greater than open, and MACD is a greater than signal line and increasing MACD. MACD is increasing, then we say that the teal color, teal green is there. And dark green colors of candle appears when close is above open and high volume like 1.5 times volume is of past 20 periods volumes average. Okay. Now coming to the bearish candle, the simple one is where the close is greater than open is greater than close, and then second is crimson red, open is greater than close, and MACD is lesser than signal line, and MACD is decreasing. Stage 3 is dark red, where open is greater than close and volume is high. Now coming to the next, like systematic walk color fill. What is the systematic walk? Market has two phases. Sideways, random walk price between upper line 3 and lower line 3 indicates a sideways phase. Also, when the price is within sideways cloud, market is in sideways phase. Systematic walk, price above upper line 3 or below lower line 3 cross across multiple time frames indicate a trend phase. This is represented by two color fill band. So we will see in the next how it appears like. So color fill bands, bull zone, in a bull zone we see that upper band filled with green or blue when there is a breakout in more than one time frame. So we have seen that we say that the price there is a breakout when the line 3 is crossed, or level, or we say that the price is at level 4. And when this is happening in multiple times, suppose we are looking into the 1 minute chart and this is also in at least 2 3 time frame, then some kind of color filling you will start, you will see. And the higher time frame, the number of uh, more numbers, the more strong color you will see. Like breakouts is in more than two or four, five time frame, then you will see the blue color, and when it is only in one or two, you will see a green color. When there is only in one period the breakout, then you will not see the filling, just you will see that the band has appeared without the filling. So this is where you can recognize that how strong is the market. So in the bullish case, there are two bands. One is upper band filled and there is a lower band filled. When we talk about the field with the lower band, it is a field with again the green or blue to represent the position of trend line and oscillator line relative to upper and lower oscillator band. So this is something which relates to oscillator, but obviously we'll discuss that in that this in oscillator phase, but we should also discuss here that why the color is so. So green color when the trend line and oscillator line are above the upper band indicating a bullish phase. Blue color when the trend line and oscillator line are above the upper band and the lower band is above the zero line indicating a strong bullish phase. So additionally of what is written in blue, when lower band is also the zero line, then we can say that there is a strong bullish phase. Now, the opposite of this in the systematic color walk, in the bear phase, we see there is upper band filled with purple, red to represent the position of trend line and oscillator line relative to upper and lower oscillator bands. So red is color, color is red when the Trend line and oscillator line are below the lower band, indicating a bearish market. Purple color band, the trend line and oscillator line are below the lower band, and the upper band is below the lower line, indicating a strong bearish phase. Lower band filled with purple or red color when there is a breakdown in more than one time frame. So this is just opposite what we see in the bullish phase. Okay, just one time you need to understand this, and then you look into the chart, and with the colors you will correlate that how strong is the market. So here, so now we will see on the chart that how this upper band and lower band appears. So in the systematic color fill, the upper band, when the price is like here, the nearest is representing the breakout, and the farthest representing the trend line and oscillator lines related colors. So price is here, then we have the first breakout related field, and then in the last we have the trend line. Similarly, when the price is going below, then we see that the nearest to the candles is breakdown colors related to breakdown. When it is in multi-time frame down, we see the color like orange and red and the uh, purple. And here you see uh, like on the top, the bearish upper band, where you see these lines are related to the trend lines. So the price is when you see these both lines are filled, then more or less you can say that the market is having the strong direction in whatever they are. Okay, now coming to the price level, which displays close price, daily change, and time. Here you see that the -3 is the number, absolute number, that from the previous day. Price is 3 points less, and this is the close price, 224.25. And this line is the price is in a percentage, like it is 0.5% less than the previous close. And here we see the exchange time. So if you want to have this, you can activate, otherwise by default it will not appear. So this is the sideways cloud. It is a cloud, and when the market is within this cloud, it is not going to move fast. So in when it is in multiple periods, like in 1 to 5 minutes time, then we can say that it is a very less probability, almost impossible, that price will move. So it is necessary that the price should have a breakout or breakdown, then it will move. So this line are basically, this cloud's border is basically uh, Bollinger Bands, Bollinger Bands, and when the price is within these bands, there is no much movement is expected. Well, yes, might be that in 1 hour the price is moving from lower to upper, then we can have a good moment in 1 minute chart. But for that particular time frame, we see that the price movement is in narrow range. It should come out of this, then we see the good movement. And then we see this alert signal, which appears in the chart like A is alert, and when it is in green color, then there is a bullish, probably bullish phase will starts. And then we have bearish, we have the close of this when and uh, this has the opposite in bearish. Like here we see that the bearish phase is started, and this is a close of bearish, so it is a red color in a yellow background, and here red with white color. Okay, so you should memorize this when you are looking into the chart. So now the oscillator that we will discuss in a new video. So have a just look around like what we are talking. We will have one chart, and then we will find. Now we will see on the chart that what we have studied in the PPT, how does it look quickly. So this is Tesla's chart in 1 minute, and If you see the different lines, you can see here like it is not reached to top, it is like level lines, line 5 6 7 5, fifth line, after fifth line it fold. So a different way of overbought was there, which we will see in the next video. Like here the overbought, but the signal came here, and then there was a kind of candle colors. You see the MACD candle starts here and then market fall. So always we have, though this exit is the last step where we should not stay, but we always have to follow some risk management. Like level is going up, then we might have here or here the stop loss, and we can gain good profit. Or if you see from here to here, it is a 2%, which is a good move, so we will not wait that the profit should come down. Okay, so again this is the, again, some moment. Or if you see the price fall from here, so I'm just looking into, yes, this field I was expecting that here the price started from the level 8 itself, and it carried out, and then here or here we can have the stop loss. Again, if you see here, here again the same thing happened, and then things moved on. Okay, let us look into some other current market like BTC. And okay, now we will see the BTC. This is the current chart of BTC. Or we can, until the things are coming, we can see in the daily movement like here. So the price started here, and then uh, we reached here. You can see the top is visible. Here the cloud is visible. Like after this the market went into sideways, there was very less movement. So okay, so what we have seen is like this color filling, this bands. Okay, and then the price thing. Here we see the price and the table, and this we will look into the another video. Okay, so we are closing this video, and if you have any questions, you can contact me for the technical thing to on this address, and we will certainly make a video and come back to you. Thank you. Now I will come with the new video on oscillator part.